Welcome to Automotive Life. My name is Lucky, and today I have a special guest. I have Doug Goodman, the CEO of Luxury Lease Partners. He's here to tell us how easy and affordable it is to get the exotic car of your dreams. I want to thank Doug so much for coming on. Tell us a little bit about Luxury Lease Partners.
Like, pleasure to be here. Luxury Lease Partners was founded in 2016 on the realization that there was a gap in the financing market for exotic cars for people who had means but had credit challenges for whatever reason and were getting turned down by conventional banks. Proved to the market that there was a receptive audience for this. And since I've expanded so that we do deals up and down the credit spectrum from 850 credit scores down into the 400s and have brought dream cars to thousands of people at this point.
Awesome. That's one of the main reasons why I wanted to bring you on here is when I read your website, it said, the credit is not a determining factor. Can you explain a little bit more about that and how it works?
Yeah. What we're looking to do is we're looking at the car and we're looking at the overall picture of the customer. Credit in itself is not going to be a disqualifying factor. It's going to be a part of the credit decision where it's going to determine how much you have to put down and how much you're going to have to pay. The better credit score you have, the less you're going to have to put down, the lower your rate's going to be. The worse your credit profile, you're going to have to put down a little bit more. You're going to have to pay a little bit more. But overall, what we're trying to do is for every customer, find the right deal for that customer's credit profile.
No, that's great. I mean, in my traditional auto lending, it's like once somebody's a certain score rating or they have certain criteria that the bank doesn't like, it's an automatic termination. So I think that's really cool that you guys kind of leave it open and let the customer kind of be judged from other merits. Now, I know one of the big things is income. Tell us a little bit about how income plays a factor and how you guys check it and everything else, because there's so much income fraud going on right now. Pay stubs, bank statements, all that fun stuff. But you can tell us about that.
When we're talking about income, improving income, what we're really looking to do is assessing your ability to pay for the lease that you're signing up for. And we're a little different than conventional banks that we're not going to say, look at your pay stubs and your W-2 forms. We're not going to require you to get a tax return over to us. We're going to look at your bank statements to show cash flow coming through there that shows your ability to pay. So really, we're looking at that income showing up in your banks. So in order for us to underwrite that, we're going to look at recent bank statement history. So we're going to look at your last 3 months bank statements, and review that. So we got to see that stable source of income coming through. Doesn't need to be from a salaried job. It can be from a business that you own. You've got to demonstrate that you can service the lease that you're signing up for. Now, in terms of proof, you mentioned, bank statement fraud and, people trying to represent that they're somebody that they're not. So it's something that we saw, particularly in our early days. It's much too easy these days to put together a fake bank statement. You throw a scanned document into Adobe PDF, yeah. You go hit backspace a couple of times. The simplest thing that we saw people do is that, you've got great bank statements, Lucky. So they would, your friend would borrow your bank statements, change the account number and the address on it and submit it to us. Or, they'll go in and they'll change a couple digits on the thing, try to make it look like you got $120,000 in the bank account rather than 20. But what we do is we do electronic verification of your bank statements. So we use a service called Finicity. It's a MasterCard product. It's similar to Plaid.
Yeah.
And what it does is you log into your bank account solely to authorize that bank to give us a data dump of the last 90 days history of your account, look at balances, transactions, and ownership information. So we're going to know that account belongs to you and it's got the transactions and amounts that you represented to us.
Okay.
Right. And, at this point, we don't catch a lot of people. What tends to happen is, when we get the application, we get the 3 months bank statements, we review it, and we let the people know that part of the approval process is to get the third party verification of your bank statements, and people just sort of disappear from the process.
Oh, that kind of scares the illegitimate people away.
Yeah.
I do have one question though on income, which is very important is, I like the fact that you guys can take just income from bank statements. One of the hardest things as a YouTuber or even I hate to say it, like OnlyFans people, you can show this money coming in every single week, but unless your job fits into the bank's demographic, they want to peg you as a certain credit risk. that you don't have a credit profile for a YouTuber or somebody does OnlyFans or whatever else. So the fact that you guys take bank statements into account, I think is a huge deal. And I wanted people to kind of hear this and realize that this is actually a really good thing.
Yeah. And specifically for, YouTubers, athletes, entertainers, it's not a majority of our business by any means, but we have a long track record of working with folks like that. And, what I'd say is we look to find a way to get to yes on a deal for someone who legitimately can afford it, right? So if you're looking at a YouTuber or you're looking for an athlete or a recording artist, we've had times where we've had a recording artist that hasn't shown the bank history, right? But they're able to show that they just got a contract that's giving them a $2 million advance, and here's the milestones for it, and we're able to use that to get comfortable that person's going to be able to service the lease.
Wow, that's very cool. So one of the questions I have is banks right now, especially with all the fraud, residency is a big factor. What does residency mean to you guys? Is it just something you just need to have a home address? Can it be a commercial address?
We're going to need to establish your home address. What we're going to need is the address on the application needs to line up with the address where the car is going to be garaged, needs to line up with the address on your insurance, right? All that needs to coincide. What we're looking for in the underwriting process is stability at your job and at your residence.
Mm-hmm.
Typically, we're looking for 2 years of stability at each. That being said, there's lots of cases where that's not going to be hit for whatever reason. For you move for a job, you change.
Yeah.
We all change jobs and you get better opportunities. Maybe that's why you're coming to us, that you got that new job and you're ready for the car to show your success. Where we don't hit that minimum threshold, it's with us, it's not necessarily going to be a hard cut, right? We're gonna use that to dive into your overall credit, your overall situation, right, and make sure that we're seeing the stability overall in your picture that makes us comfortable that you're going to be able to support that lease going forward.
Yeah, that's something actually that I really like. I don't know if you guys notice this, but what Doug's talking about is there's multiple factors that helps people get approved. Where traditionally financing, once we look at your credit score and your DTI, that's it. Where it seems like with you guys, more of your underwriting is done on the person, income. Credit does play a factor, but not a determining factor where you basically get kicked out of the program. But it gives you more of an outlook on the person itself and to help them get approved. Is that kind of what you guys feel like your success has been, is more of working with the individual to help them get approved to get the car they want?
Yeah. Our fundamental philosophy is we're looking to say yes to people, where I think you might experience that conventional financing. They're looking for a reason to say no. What's driving that decision is we talked about the credit, where that's going to be an influencing factor on the deal that you get, but it's not going to disqualify you. We're also looking to the car, and we're looking to the individual. So on the car front, we're going to look at the specific vehicle that you want to lease, the condition that it's in, how it's likely to depreciate or hold value, and that's going to drive what that lease structure looks like. And on the individual, again, we're looking at the overall picture that you're showing of stability, of ability to pay, and in your background to make sure that that you're going to be a great customer going forward. At the end of the day, we're going to be able to get to yes on most folks.
Well, yeah, I noticed you brought up vehicles. Now, can you tell the people at home what kind of vehicles you lend on, and what are some of the vehicles that you stay away from?
Sure. So overall, we're looking at highline and exotics. We can do everything from recent models or new to older or collectible, but we predominantly do late model exotics. A rule of thumb would essentially be the car has got to be a retail of about 80,000 or more for it to
make
get
sense,
into
yeah.
the spectrum. In terms of what cars we tend to do, Lambos are our biggest mark, but it's all the usual suspects: Lambo, Ferrari, Rolls, Bentley, Porsche, McLaren. In terms of what are our favorite cars to do, we don't have a favorite. We're going to tailor that lease to the specific car, but how well a car leases out is going to have more to do with the collateral itself and how it's going to depreciate. So, a car that's going to hold its value, a Ferrari 488, right? It's going to hold its value very well. So you're not going to have to pay for as much depreciation over the life of your lease. If you're looking at a car that doesn't lease out so well, a new Maserati, if you go to the ALG data, they're going to tell you that over 5 years, a Maserati is going to hold about 15% of its value. Your lease is going to have to account for that, right? It's going to have to depreciate down to where that car is going to be worth at the end of the 5-year period. So you might find that there are certain cars that are going to lease out at a much more, a lower payment, even though the car might be a higher purchase price, just because it holds its value better than some others.
Okay. I think that's something that people need to keep in hand is the certain cars you pick, depending on, like you said, depreciation factor will really help structure your payment wise. Now, one thing I want to talk about, which we talked briefly about, was what cars do you stay away from? Because every bank, most of my people that watch this own dealerships, and there's some regular people out there, but every banks have certain criteria where they don't like to lend on certain vehicles for whatever reason. What is some of the vehicles that you don't like to lend on?
There's a couple things that we either try to stay away from or that really impact how strong a lease we can provide for somebody. First type of car would be something that's got a messy history. So a car that's got airbags deployed, we're not going to do something that's a salvage title or something like that. But the reason why, those cars tend not to lease out well is because they tend to have more value to a retail customer than to the next dealer that would want to buy it.
Yeah.
So what we have to look at in terms of the value we assign to the vehicle is, if God forbid, you weren't able to pay, or we had to get that car back and resell it to somebody else, how much are we going to be able to resell it for?
Yeah.
Right. And that road that's got an accident on it, or it's got airbag deployment, that's going to really impair the wholesale value to the next dealer down the road.
Okay.
Second class of cars that can be challenging that we can do are collectibles. When we're looking at collectibles, our appetite for it is really going to depend on the depth of the market for it. So if you're looking at classic 70s Porsches or a mid 80s Testarossa, there's lots of depth in that market, right? Even though that's technically a collectible, we're able to do those well. They're going to hold their value well, and if it's not right for you anymore, there's going to be a line of people behind you that are going to pay a similar amount to what you likely would have paid. Where collectibles can get in trouble is if they're very unique in some way. You may find that there's a nostalgia car or a Restomod that's very valuable to you for some reason. And you might say it's $1 million car, but if the next guy says it's a $200,000 car, it's worth $200,000 in a default situation. So those are ones that we try to be careful of. And that can be the case both for a unique collectible or, a car with very unique options.
Yeah, I remember you spoke a little bit about that, how if I wanted to rent or lease to be a Lamborghini twin turbo Huracan, probably wouldn't be the best thing to bring to you guys because it's just heavily modified, too many issues. And the next person, like you said, the dealer, may not see the added benefits in the cut. We
had a customer who wanted to get a quote on a Senna. And the Senna itself, it was a beautiful car, low mileage, and it had about a $250,000 MSO custom paint package, right? Huge option. But when we looked at it, let's just say it was a unique color that was very valuable to the lessee, but probably not valuable to anybody else
the resale
who was
market.
The car. So, when we gave the quote to the customer, it was a big down payment because we really didn't give him any credit for the $250,000 option that was put on. And when he questioned it on it, he said, well, look, if we ever get this car back, that paint job is not only not worth $250,000 to the next guy, it might actually be a negative, right? So that's one of the considerations that can come into play with unique cars. The third case would be older cars, an older Bentley with air suspension. You could get to the point where, if that air suspension goes, the replacement's going to total the car because the fix is going to be worth more than that car is.
Yeah, than the actual
value. That's where we'd stay away from it, just because we're looking at the value of that underlying car as our ultimate source of protection. And if that value's at risk just on mechanical breakdown, then it's not going to work all that well.
Well, I'm glad you brought up classic cars because I know there's a lot of people that I'm sure you've heard of Woodside Credit. These people getting these 10-year loans on classic, like American cars. I heard you mention Porsche and Mercedes and Bentley, but what about something like a 67 Mustang Fastback or like a 63 split window Corvette, something like that? Are you guys able to lend on those type of American classic vehicles?
Yes, we would be able to. I would refer you to our credit team to get, specifics on, how aggressive we're willing to be on that. But the examples that you're giving there are classics that are going to have a depth of buyers behind them.
Yeah.
Right. You're not going to get hurt. You're not going to have an issue trying to remarket one of those cars if you had to.
Yeah.
Okay. If you start getting to a Packard or, or Kaiser Darren or something, it's more of a specialized market, a customer base where there's probably more people selling those cars than buying them right now. And those dynamics become a little bit more difficult.
Okay. I want to kind of pivot back to leasing because I just remembered, I forgot to ask you. Now, when a consumer comes out and gets a leasing program from you guys or leases a vehicle, does it show up on their credit report?
So for us, we don't report to the bureau. And this is something that most of our customers would prefer. What it allows you to do is, to have that car that, that you love without it impacting your ability to say, go get a mortgage, or other reasons why you're going to use conventional credit. I mean, we know that none of these cars are need cars. This is a want business, not a need business, right? So, you don't want your want business to impact the needs that you have in your life.
Yeah, no, I'm glad you brought that up because I don't think people realize, like, when you have $100,000 auto loan on your credit, it makes people freak out, and especially when you get into $200,000-$300,000. Even though like my credit's pretty good and my income is pretty good. I recently went and started looking at houses and stuff like that, and that played a massive part in what I can be able to afford when it comes to my mortgage, because they're like, well, you got this $200,000 car in your credit. We're just going to cut your mortgage payment in half. I'm like, well, that's my car. That's not really, I can get rid of it. So I think this is why, which basically brought me to you, is the reason I wanted to bring you on is, one, to learn more for myself, because I know how the program works, but I want the people to know how many benefits it is for leasing. I know we talked a little bit about it when we had breakfast, but sorry.
Can I jump back on that? I mean, full disclosure, we do, at the time of underwriting the deal, we will do a hard credit pull, right? So you'll see a credit pull on your credit report, but you won't see the lease itself. People have asked us in the past where they've gone out for credit in the future. We can write a letter of recommendation acknowledging your payment history as support for future credit where that's helpful for folks.
Okay, I'm glad. That was one of the questions I was going to ask, is like, explain how letters of credit work when, as a dealer, if you say you've had $100,000 loan, I don't see it on your credit, companies like this will give you a letter of credit so we can go to other vendors or if you need a line of credit showing that you're a good qualified buyer.
But this is a use case we see all the time where, you get the 800 plus credit score in there who comes to you and said, look, I've got a line on this car that I really want, but I'm also closing on a $3 million mortgage in a month and a half. And I don't want this to show up on my credit report before then. I'm willing to, in this case, that person almost certainly could get bought by a conventional bank. We're probably going to be a little bit more expensive than that. Yeah. But the convenience and ability to keep it off the credit report are worth it for folks.
Okay. One thing I want to touch on is some of the things not to do when you're on a lease, because I know we had a slight discussion off camera about this, which is pretty hilarious. So can you explain to people what you can't do when you're leasing a vehicle?
What you have to remember is, at the end of the day, you are responsible for the condition of the car and the value of the car on this lease, right? The lease is intended for your use and for your enjoyment. We want to help people get into the cars of their dreams and put these fantastic cars in folks' driveway all around the country. What you don't want to do is misuse the car. And by misuse, I would put a couple of things into that bucket. One is, first of all, don't abuse it. Don't drive it off road. Don't fail to maintain it, because all those things are going to impact value. And, eventually that's going to
hurt the consumer.
It'll work against you. It'll end up coming out of your pocket. But more specifically, use it for yourself. Don't rent it out. Put it on Toro. Don't sublease it to somebody else. And, don't lease it on behalf of somebody because they don't think they can qualify. The reason why this is a bad idea It's a couple of fold. And I know you've talked about it on the channel before, so I'd like to echo and reinforce what you've said. First and foremost, most people who put their cars out for rent underestimate the true costs of doing it. They look at their lease or their loan payment and say, okay, I got to cover a nut of $2,500. So if I can rent it out for 5 days a month at $500 a day, I'm good, right? You're not, because any kind of rental activity like that, those people are going to use the cars harder. You're going to depreciate the car faster. So not only are you, paying your monthly on your lease or loan, you're paying additional maintenance and depreciation, or you're costing yourself additional maintenance and depreciation. Second is you're opening yourself up for tremendous liability. If you rent that car out and someone gets in an accident, their insurance is not going to pay, your insurance is not going to pay, and you're going to be on the hook for the full balance of that car.
Yeah.
Okay. And the last thing that you want to do is have, a $250,000 judgment over your head, which you're going to be paying off over the next 10 years.
Yeah.
We don't want it, and you don't want it.
No, I'm glad you brought that up too, because like I tell people this, like you said, multiple times, but people don't believe me. Like, banks actually worry about this type of stuff. And not only are they worrying about it, you actually take action. If one of your customers rents out their vehicle or subleases it out to somebody, what do you guys do in that case?
In the case where we identify that somebody's renting or subleasing that vehicle, that car is subject to immediate repossession, and you can lose all the equity that you put up in that vehicle. Mm-hmm. So let me back up a little bit and say, we're very transparent up front that this is not a permitted use. Our dealers know that we don't lease to renters, to known renters. Second, it's in the contract that you can't do it. But even beyond that, we put together a one-pager that you've got to sign with a bright yellow background and big bold text that says, you may not rent this car, you may not use it for for-hire or livery services, you may not lease it on behalf of someone else. If you do, you will subject yourself to losing all the equity in the car, right? We don't want to be in a situation where we're at cross purposes with our lessees.
Yeah. So I like how you guys are transparent. And I remember you told me about that separate paper you make them sign. But I remember at breakfast, you told me about a story about somebody that even after signing all this stuff, just went and proceeded to put it on his website and rent it out.
Yeah. I mean, look, people have a remarkable ability, whether it's folks who are going through the lease documentation and not reading it, or people saying, hey, this is just a legal disclaimer and, I'm not really going to be subject to it, or people just think they can get away with it. People will try. We don't have a lot of them, but people certainly do try. We had, one guy who was renting the car out. We spotted the car on a nationally known rental site, could possibly identify it as ours. We actually went out and had the car repoed while it was being rented. The driver of the car showed the rental agreement that he had with the lessee. And, the lessee, the car gets repoed, the lessee calls up, says, why'd you repo my car? I'm current on my payments. I said, well, you were renting it out. He said, no, I wasn't. I said, well, we've got a picture of it on your Instagram and your webpage showing the car. And he said, well, I just put it up there for publicity purposes. I don't actually rent it out.
Said, yeah, sure, buddy.
but we repoed it, and somebody was driving it and said they, and showed us the agreement they had with you to rent it. Look, it's a bad situation, right? People, if somebody's looking to take a car that frequently does this, like a Urus, okay, somebody might be putting up $80,000, for that car, might be putting up $100,000, depending on the price they get it at. If you're running the risk of either losing that $80,000 to $100,000 that you put into it in the first place, or even worse, having a customer that you give it to who runs it into a wall and having that car worth $60,000 and you're going to be on the hook for $250,000, it's a risk and a liability that we see people underestimate time and time again to their detriment.
I'm glad you brought that up too. Like I've talked about it too. This is a huge liability. If the consumer rents it out to somebody else and their customer crashes it, the bank is left, without collateral or protection for their collateral. The customer is left without insurance. Sometimes they can even be fined with insurance fraud if they collect the payout and then tell them later on it was rented out. But the biggest reason why I wanted to bring this up is I know right now the market is slowly changing. We talked about how the economy is slowing down. And I know a lot of people out there are starting to get into the fact of, hey, I can't afford this, like you said, this $2,500 payment. I'm just going to rent it out a handful of times just to cover my nut. I'm here to tell you, and I'm sure Doug is too, do not do that, especially right now, because something like this is going to happen where your customer's going to crash it. They're not going to be covered, or something like this. Like you could have your car almost halfway paid for and you put it in a bad spot. The bank's going to come snatch it up from you.
We see a couple of things on it. With our structure, we have, as we talked about earlier on, we have what's called an equity lease, where over the lifetime of our lease, we're going to advance a percentage of the wholesale value of the car, right? So what that means is with the equity that you put in up front and the equity that you build over the lifetime of the lease, you should generally be in a position where the car is worth more than what you owe on the lease at any given point, subject to variations in market price, subject to how much you're driving the car and how hard you're driving it, right? But in general, you should be in an equity position. You should always have equity in that car. What that means is if you get out over your skis, if you can't afford the payment anymore, the best thing to do, at least with our leases, is to call us, right? And say, hey, look, guys, I'm having trouble. And generally we can help you. You can either bring the car back to the dealer you got it from or one of the other dealers that we work with, or we can help you, sell that car off for a fair price. And generally you can put some money back in your pocket and get out of that payment. And if you get to the point where you're back on your feet, the business is doing well again, and you're ready to get back into that type of car, if you've been responsible in how you've worked out that situation, we're happy to have you back.
That's very cool. So you don't hold it against them as long as they keep working with you and negotiating?
Not if they're responsible borrowers, right? And they work with us, they're upfront. We're happy to work with folks. We're happy to help people get their equity back out of the car as best as we can. Where the situation gets bad is if the reaction to it is either, okay, now I'm going to throw it out for rental, a couple times a month, or just sublease it to somebody else to take over my payments, right? Because then you get in a situation where you're subject to a complete repossession or somebody, as we talked about, getting into an accident that's not covered. Or you get folks who get in trouble and try to hide. And the problem is you can avoid the calls, you can try to keep it in a, behind your gated community, but eventually you're going to get to a point where, where the car gets repossessed or goes to court. And if we've got to go that route, then generally you're not going to get your equity back.
Yeah.
Again, we would rather, we acknowledge people get in trouble, right? It happens to everybody, especially when you're talking about, as we said, want cars, not need cars.
Yeah.
You don't need the Bentley to drive to work necessarily.
Yeah.
Right. If you're in a situation where it's tough to afford that, you take the want out of your life for a little bit and wait till you're back in a better position, and don't compound the issue.
Yeah. One thing that I noticed is during the whole time we're talking, it seems more and more relevant that you're basically working with people. You work with people with their credit to get them in the car. You work with the down payment. You work with the different types of cars. Also now with the repos, like, hey, we don't want to repo your car. We want to work with you to maybe do any type of like you said, buy back, sell it, come back again, don't hold it against you. So you're giving people tons of options to work with them. And I don't know if you guys know this, but this is almost impossible to find when it comes to the lending industry. This is why I wanted to bring Doug on, is because banks don't do this. Like most of the banks I work with and the repos I get, once they snatch up your car, they don't care. They don't want to work with you. They don't want to negotiate. That's it. If you have issues with payments, anything else like that, it's a wrap. So the fact that you guys are, very open in dealing with stuff. And even one thing I want you to kind of talk about too is when like everyone's hearing this right now, if they were to go like to your website, I know you said there's a phone number to call. They can actually call somebody right now and just get a generalized quote on what they qualify for.
Yeah. So one of the things that we encourage people to do, because we know that there's a lot of people out there who either have been turned down before, when they've gone and tried to shop for an exotic, or think they will, either because they've got poor credit or, had some issue in the past. They had a bankruptcy or a repo in the past. Or they think because you mentioned the YouTubers,
Yeah.
they think because their income source is considered non-stable that that's not going to work for folks.
Yeah.
And what we encourage people to do is come to us. You can come to our site. On our site, we list inventory from some of our dealer partners that we work with. You can go through and look for a car that might be interesting to you, and then call in, work with one of our underwriters to essentially get pre-qualified. Say, hey, I'm interested in in this 570. It's selling at such and such dealer for this price. About what would my quote look like? And we'll work with you. So if you've got a general sense of what your credit is, we'll work to get you pre-qualified. And once you're pre-qualified and know that you've got a lease structure where you can come up with a down payment and it's a monthly that you can afford, then you can go shop for confidence, whether it's through one of our partner dealers that we show their inventory on our site, or just the local dealership that you want to work with, or any car that you find around the country.
That's
we
very
can generally
cool.
work with that.
And you said you're actually talking to a real human being, not an automated system, no credit app you fill out online. Just talk to a person, talk about your finances.
Yeah. You can you go to our site, submit a lead, and we'll have someone from our team follow up. The reason why you're going to get a conversation around this and sort of need to have a conversation around it is that when you're dealing with vehicles of this quality, these type of machines, the leases themselves tend to be a little bit more bespoke. What do I mean by bespoke in this case? Well, one is it means that our lease itself is going to be underwritten to the specific car. Every 911 is not going to be the same based on, look at the range of 911s, the options are going to, go from the base to the most option car. It's going to be a huge range, right? So both, the options can make such a difference. The quality can make such a difference. Vehicle history and mileage make a difference. So your quote's going to be specific to that vehicle, its quality, and how it's likely to hold value over time. So, and then the second part of being bespoke is that, since we are, a private source of capital, we're not beholden to banks, and we can structure something that makes sense. If you want something that looks more like a finance product, right, that you want to own this car long-term, we can drop your residual to a low value. So it's basically paid off when you've gotten to maturity. If you want something that's a higher down and a lower rate because you can come up with a bigger down and you want the monthly to be less, we can work with you on it. It's really a question of what's the car, what's your situation.
Yeah. So it's really just tailoring everything around that individual's particular situation.
Okay. At the end of the day, it comes down to your ability to support the payments of that lease. So, I'm not going to sit here and say that, hey, you can just go qualify for a Huracan because you came to our site. Right?
Yeah.
You do need to demonstrate the ability both to come up with a down payment and also to be able to support that payment going forward. Right? You can't do it just, we're not the kind of group who's going to say, hey, if you come up with a third of the purchase price, we'll approve anybody. Mm-hmm. Right? We want people out there who, can be in can afford the car, are in the right car, so that they're long-term successful. As much as, we do repo cars at times, and, that's a necessary part of being in the leasing business, we'd love a situation where we didn't have to touch anybody's car.
Yeah, definitely. So one of my favorite things are repo stories. Can you tell us one of your favorite repo stories?
Fortunately, we don't have a tremendous number of repo stories. All in all, some of them you don't want to disclose because somebody might be able to spot who it is. But there's one story that was a complicated repo and, had a little bit of a kicker at the end. So we had a lessee who had two cars with us, owned a small business that was generating, great income. And it was, I believe it was a Cullinan and a Urus, both, if not new, very low mileage. And the guy fell off the radar. Okay, he just stopped paying, couldn't get in touch with them, couldn't track them down. The cars themselves, we were having trouble getting a location on them. We didn't know where they were. Found out that the customer had actually been arrested. and at the time was in prison for financial fraud.
Oh, wow.
So without going into the details of it, it wasn't necessarily looking good. We ended up getting in touch with him in jail, and he was very confident that he was going to get out and was making arrangements to try to keep the leases current. We got a payment. What was sort of tough to try to keep it current, but was doing his best, it seemed. Found out later that he wasn't going to get out because he he got a release order from the judge to let him out of jail. But it was found out that release order was forged by him and signed with the judge's name. So it turns out that he wasn't going to go anywhere for a while. Eventually, we did track down the cars that were being stored in a warehouse. It took us a long time to get in there and get the proper legal authority to get into the facility. When we did, we found the cars covered with a fairly thick layer of dust and some dead batteries. But at the end of the day, they were still low mileage.
Wow. This is why I love our business, because just crazy stories like that. Forging a judge's signature, that's hilarious. I didn't think that anybody would be that crazy enough to do something that dumb.
Look, it's, people try things, and I don't know necessarily the mindset of why you think, it's not going to catch up with you, or why someone whose financials looked really strong and had a business that was cash flowing, very well would, need to turn to this on the side. But, look, we live in a country where people sometimes want to take the shortcut. From what we see is a lot of times it doesn't work and backfires, or it works for a little while, and puts you in a worse place than, if you had just gone the steady route of building up and not needing, you don't necessarily need the Cullinan right now. Maybe if you're stretching, maybe we can go for a great car like a Bentayga and build up to it over
I'm
time.
shocked he still had two. He should just got rid of one and then just kept the other one. But I know that we're almost out of time, but I definitely want to get your input on two more things. First one is all the programs you guys offer, because I know you have quite a few to help collectors and regular people get cars. And then two, we're going to wrap it up with like your final thoughts, just kind of what you want to tell everybody on the camera, and we'll go from there.
Yeah. So at the end of the day, our product is an equity lease, right? And, that lease, as we talked about before, is going to have, a down payment and a rate that's going to depend on, on your credit score and how much money you want to put down. Within that, we've got some flexibility to create structures to help you get into the car of your dreams and solve another couple of problems that you might have. And there's two particular things I'll bring up. One is a sale leaseback program. So sale leaseback program would be you own a car outright, but you have a short-term business opportunity that you need some quick cash for. So in effect, it's a way to borrow against your car. Well, let's say you have a $200,000 car, you need $100,000 in cash. You sell the car to us for $100,000 and we lease it back to you, right? And essentially you'll pay down that balance over time until you own it outright again. Okay, so that's sale leaseback, lets you tap into the equity in your car. The second thing that we do, and this for people who own multiple cars or own cars outright, is we do what we call portfolio deals, where we might let you, if you own a car outright and, the down payment, on the next car that you want is this much, we'll let you tap into the equity of that car that you own outright by putting it forward on the deal as additional collateral. And based on that, we may reduce the amount of equity we require you to put up for the new car, reduce the down payment.
That's cool.
For the new car.
Keep two cars, use one as
it's
almost like a down payment.
Yeah, you're basically using your existing car as part of the down payment towards that next lease. And if we do that, we're going to have to hold on to your title and put a lien on it, so you can't sell it out from under us. It's a way that we can be creative to help solve a situation where you have the ability to pay for it. Right, come back to that, but that you want to limit the size of your down payment for whatever reason.
No, that's very cool. Like that's just one other thing we talked about how you're going out of your way to help customers to come with different options. And I know some of you guys at home are wondering, why does somebody need two exotic cars? This is like a hobby. That's why we say collectors. Like it's a passion. It's something that you enjoy, you love. Like I just sold all 7 of my cars, and trust me, it feels weird not having more than one car in my garage right now.
Like if you've got, if you're married, why wouldn't you need the husband and wife car? We had somebody who had had 2 white Rollses, one with a blue interior, one with a pink interior. There's there are plenty of reasons why people have the need for more than one car, or they're a collector and just like to see 4 amazing cars in their garage, right? No. As long as it's for them.
Yeah.
And they're not getting that second one for someone else.
Exactly. One last thing, your final thoughts, anything you want to tell the people out there watching, either about your company, something you'd like to just reiterate, share?
Yeah, I think the message that I would leave folks with is, is sort of twofold. One is that if you've got the ability to pay, then there's a way to get you into the car of your dreams, right? Even if you've got a challenging credit situation, we can be creative in helping solve that problem. The structure we come up with, not everybody, might be more down than some people want to pay. It may or may not work for everybody, but we can find a way to get a structure, generally can find a way to get a structure approved. The second is that most people, or many people, when they think of how they get into a car in an effective way, how they, buy a car and want to afford it, they're thinking cash or they're thinking loan, right? And a lot of people don't think about a lease product. What my message would be is, one is we can work with any dealer, just about any dealer around the country for a new car or a pre-owned car, right? Even if it's not something that the finance manager at that dealership is offering to you, if you find a car somewhere, we can usually work with you to go ahead and acquire that car and lease it to you. And the second point is we encourage you to come to us and find out more about the program and get pre-qualified, because if you know that you can afford a lease, then you can shop with confidence at the dealer of your choice.
Awesome. Now I have one quick question. What about people that are out there currently with a really either high loan or a high lease? Because we talked about some of these loan sharking and kind of go on with the exotic car realm with athletes and influencers, stuff like that. Do you have the ability to refinance to help those people?
Yes, we do. We're happy to refinance an existing deal. The question is going to be where that refinance is coming from. Since we need to acquire the car, from the current holder, to the extent that there is a private holder, if it's the title's in your name, or there's a lien holder that's challenging to work with, that makes that process more complicated, but it can be done. Okay. In most situations, if you are in a place where, you got a deal because that's what was available to you, your credit's gotten better over time, or, you're looking for the tax benefits of a lease program, it may make sense to take a look at that, and we're happy to do so.
Oh, and I forgot one more thing. You could put a lease in a company's name, correct?
Correct. So in all cases, we're going to look at your personal credit. But if you've got a company that you are the majority holder of, or you can get your business partners to give explicit authorization to use the company, you can put that company's name on the lease. And there's 2 ways to do that. One is the company can be the lessee with you as a personal guarantor, and then you specifically run the lease through the business. In that case, your insurance needs to be in the name of the business as well, so that matches up. Or you can do it as a personal lease with the business as a guarantor making the payments for you.
Very cool. Well, see, guys, Luxury Lease Partners has you covered on everything. So whether you're buying a new car, buying a used car, leasing, classic car, exotic car, refinancing your car, pretty much everything under the sun, you guys pretty much handle.
We can handle pretty much any classic or exotic car. Anybody from credit across the spectrum, whether you're a 400 credit score, which we've done, to an 850, which we've done, we have a program that's going to fit you. So
tell the people out there, why should you lease instead of getting a traditional auto loan? What are some of the benefits?
So there's a couple of things both inherent in the lease structure and with our particular structure that that can be beneficial for folks. So one thing that's true for us and is not necessarily true for for many traditional leases that you might be thinking of is that we do allow people to pay off early, right? So if you're an enthusiast, you want to be in a car for 12 to 18 months, even if your lease term is longer than that, we'll let you pay off early at sort of your amortized balance with a small early termination fee. And then you can roll the equity that you've got into the car as sort of a down towards the down payment of that next vehicle. The second thing that comes up a lot for folks is the tax treatment of it. And just full disclaimer, I'm not a tax professional, nor am I dispensing tax advice. Consult your own professional. But there's a couple of reasons why leases can have tax benefits. So when you're buying, whether it's via finance product or with cash, when you're buying a car, typically in most states, you're gonna pay taxes up front on the full retail price of the vehicle. And that might be 8% in certain states, which can be a significant amount when you're talking about a car that's $300,000, $400,000. On a lease, although this is going to vary from state to state, in many states, you're only going to pay taxes on what you use. So basically, you're going to pay taxes on the down payment and then on the payment stream. So if you've got a car that you might not be in for a long time, you're only going to be in it for a year or two, and that car is not going to depreciate that much, a lease will allow you to only pay taxes on that top part of the vehicle value that you're actually using. So if you're in a number of cars, that tax can add up over time. So it can make sense even if the nominal rate on that lease is slightly higher than what you'd get on a conventional finance. You can save on the other side on taxes. Secondly, if it's a car that if you have a business and you're using the car for business use or can take it as a marketing expense, you may be able to take tax savings on a portion of that as a legitimate business expense.
Wow. So you get the car of your dreams, get some tax savings all wrapped up in the one.
Yeah. And that can make your total cost of ownership or total cost of use for a lease product, favorable or really competitive with what you'd see out of a loan.
No, I wish I would have done that because I get rid of my cars about every 12 to 18 months, almost exactly like what you said. Mm-hmm. And I think my Audi was $18,000 in sales tax, just gone. And then I got the Technica coming up. That's probably be another $26,000 in sales tax.
And that's the profile we see from our customers. I mean, our customers generally are enthusiasts, right? They want to be, they want to be in the car of their dreams or the car of their dreams right now. And, for many people, that's not a 5-year thing. Yeah. Maybe you've always wanted a Testarossa and you find one and you want to own that long term, and that's great, right? That's one use case. But hey, maybe what you really want to be is in a McLaren, and you get your 720 and you've got it for 18 months, and you know what? Now I want to be in a Lambo and I want to try a Huracan, right? And we see more of that, right? So if somebody wants to trade into something bigger as their business continues to do well, trade into a different mark or trade into something newer of the same model. And our structure allows that.
Yeah. And that's awesome. And you don't lose that $20,000, $30,000 in sales tax just out the window. Because I've seen people do that. They'll literally go out and buy a car, drive it for 6 months and be like, I don't like it, and trade it back in. And I'm just like, the money that they just thrown away, if they would have just leased, it would have been way easier.
Yeah. And look, I mean, we'd say in general for folks to be careful about churning cars like that. Because whether it's, if you're leasing, you can limit the sunk cost of taxes paid up front. But still,
if you're
churning, if you're churning every 6 months, you're still going to be paying DMV, or you're still going to be paying that split between the retail price and the wholesale value that you're going to get on the trade. So churning is still going to be challenging for you, but at least if that's part of how you're approaching cars, at least is going to help you manage the tax side of it.
Very cool. Awesome. Well, thank you so much for being on the show. I really appreciate explaining how leases work and how your company works.
Pleasure being with you today, Lucky.
Make sure you check out their website and feel free to reach out to them anytime just to find out if you pre-qualify for a vehicle so you can get the vehicle of your dreams. That's luxuryleasepartners.com. And make sure you check them out on Instagram as well. And if you have any questions for Doug, make sure you put them in the comment section below. We're going to do a Q&A section Q&A session here in a little bit. So make sure to ask whatever questions, and we're going to roll those over to the next video. So I want to thank you guys so much for watching. We'll see you next time.